What we're going to talk about now is managing your business. In other words, working smarter, not harder. At a risk of sounding cliche, building and continuing to manage your business can be compared to constructing a house. As building a structurally sound house requires all the building components be set in properly, and you build a base first, and then once the foundations are solid, then you go up from there. You have lumber, windows, and to manage a successful business is basically the same way. You start with the foundation, you start with the base, which is what products are you doing, what type of business are you in, and then evaluating that business. There's 5 key building blocks to managing your business. The first one is planning. And to properly plan, you have to develop an action plan to meet your goals. In other words, anticipating what's going to happen, not reacting. So develop an overall business plan first that is realistic and feasible. Will also carry benefits like obtaining financing, because you can use the plan to go to the bank with. The key, developing a budget and annually reassessing that budget. And in the budget, it's not just numbers, it's number of people that you need, equipment, all the different factors that you use in your business. Also, you have to develop goals. What are my goals? What are my short-term goals? What are my long-term goals? Short-term, I want to grow my business by 20%. How do I do that? Long-term, I want to be a multinational. How do I do that? And where do I do it? So you got to find the right mix between the two to ensure that you incorporate those into your plan. The next one is internal controls. It is important a company of any size has controls, internal controls, that they are organized. An organized company is a profitable company. You see it over and over and over again. So therefore, you have to have internal controls should be effectively designed, effectively implemented, effectively monitored. In other words, you have to monitor your controls, because if not, the controls become ineffective. So you have to take preventive action and detective action. So you have to detect what's going on, and therefore once you see what's going on, you have to take proactive action to make sure that something's done about it. Internal financial reporting. How can you run a business if you don't have the reports to tell you where you are? You need up-to-date financial and managerial information. Probably just as important as financial is managerial information. It is impossible to run a dynamic business without timely information. If people base how they're doing on their bank account without looking at what their accounts payable are, what their accounts receivable are, and therefore they fool themselves in many instances. So you have to have that internal financial reports that are important to management. And therefore you have to determine what management's needs are. They have to be relevant. The reports have to be relevant to your business. In other words, if you are producing steel, you have to know how much steel do I have to produce? When do I produce the steel? How timely is my steel production? How efficient is my staff? Reliability. The reports have to be accurate. So the old saying, garbage in, garbage out, that's so important when you're making sure that your accountant is actually putting everything. Timeliness. You need to gather information that is timely. So in other words, when you get the payroll reports, they're inputted right away into your internal accounting, not that you're waiting a month or two, because then the information is old and you can't make a proper decision. So common and crucial financial reporting includes, right, budgeting, budget to actual analysis on a monthly basis, cash flow reports, and cash is king. So you need to have your bank reconciled monthly. Key performance indicators are specific to your business. So therefore, you should sit back with your accountant and your other managers and determine what are the key components that are important in your business and incorporate that into managerial reports. The next thing is communication. You have to communicate to your staff what you want, how you want it done, when do you want it done. Because if they don't know when they have to get this done, how can they do their job? So they have to be told, have goals on an annual basis, on a monthly basis, and on a daily basis. And you should be constantly, or you or your manager should be constantly communicating with all your staff. And by all your staff, I'm talking about the guy on the floor as well as the managers in the offices. Or else your building blocks do not exist. They will be rendered useless because you're not communicating what you want them to do. Okay? So here's some of the best practice of communication, right? The tone of the top, so the leader sets the example. Physical presence, you have to be there, out of sight, out of mind. Chain of command and duties. What are the roles of every individual? And every individual should know his role, what he's responsible for, and who he is responsible to. And they must be meaningful, because it's no use telling them to do something when it's not meaningful, because inevitably that person says, well, this is useless and I'm not going to do it. And he basically tunes you out. Motivation. This is so critical to an organization. You got to motivate your staff. Motivation is not just financial rewards. It is financial rewards incorporated with goals and aspirations. How well-rounded the incentive plan? Look at your incentive plan. Does it really focus on what are the key components that you want? In other words, you want sales growth. Is your bonus based on sales growth? Or are you just giving an overall bonus to the guy and he doesn't even know what it's for? Okay, you need to balance the incentive plan to incorporate the long-term goals and the short-term goals we talked about. So you got a short-term bonus and you got a long-term bonus. A long-term bonus could be basically profit sharing in the future of the company, where you set up what they call a deferred profit sharing plan, where the employees can participate in that. The other thing is you can also determine you want the long-term health of your employees by giving them something at a gym or something along that line. You've got to look at what criteria you want to use to motivate your employees and communicate, talk to them about those, how to motivate them. Go forward, put it into an incentive plan. Tell them what your long-term goals are going to be, because it's very, very important to ensure the quality and the productivity is done by motivating. A motivated employee is going to be a happy employee, he's going to be a long-term employee, and he's going to be there, and he's going to give you the most production. So important. An accountant can help by making sure you have proper managerial reports, making sure the reports are timely, by monitoring your staff on an annualized basis. We'll come in and monitor your staff on an ongoing basis. Since we have knowledge and experience with a lot of companies, we can come in and look at your company and evaluate it in comparison to those other companies. We can set up budget to actual comparisons. We can set up your basically managerial accounting issues, managerial accounting components, and assist you in that regard. So ask your accountant, say to your accountant, can you help me set up my managerial reporting? Can you help me set up proper planning? Because, like I said before, a company that's organized, a company that is focused, a company that knows where it's going is going to be a company that's going to be successful. And 9 times out of 10, unless they're in an industry that is faltering, those companies are going to be the ones that are going to be the multinationals of the world in the future.